This is the Pim Trader. Let's review what happened this week in the stock market. This week we saw weakness compared to last week's very strong bounce. We only had 4 days in the market and they were all red downward days. In the SPY, we saw the price start high and every day got lower. One good sign is that Thursday's close ended inside the price range of Thursday's close. When we see a candle stay inside the previous candle's height, that tells us that the market has not yet decided which way it wants to go. This last week was strength, a big bounce off support. Then this week, it's a bounce off of resistance. We saw it on Wednesday of last week that the price bounced off the last low support line. This week on Monday, the price opened higher but never reached the support line, and it's been falling down since. So that's two bounces kind of off this last support line. If we draw a trend line on the support side, an upward trend line, we see the price is still holding it. Again, this kind of confirms that the market has not yet decided if it wants to go lower. We will see what happens next week, but here are some possibilities of what could happen going forward. We could see the market decide to try to move upward again and reach up to the support line of the last one. We could see the market try to continue moving the price up and try to reach the last support line, and it can either bounce off it again or it could break above it. We could see the market retest the last support line of Monday of 2 weeks ago. At that point, it could bounce up or it could fall below it. Another possibility is that we could see both scenarios and it finds resistance at the last low and support at the current low. And we kind of see the price trading in that range. Imagine a zigzag pattern for a few weeks or months. Typically, when the price moves inside of a trading range for a long time, it tends to have a really big move upward. We also could see the price drop drastically after that trading range, but typically it tends to move upward. There's still a lot of unknowns. The 50-day moving average is still sloping downward and the price has not reached it. The 200-day is starting to slightly slope downward, but still staying flat. If we start seeing that slope downward, it could be a sign of trouble. Right now, we want to see how the market is going to react. Since we're on the upper half of the trading range and we've had 4 down days in a row, it might be worth holding back on new positions for active traders until the market has decided what it wants to do. So if we do see the price bounce off the current low price, the current support level, it may present the buy opportunities that we mentioned 2 weeks ago, buying the bounce after the dip. Lastly, let's check the downward trend line. The price has not yet reached the downward trend line. If we do trend upwards based on the current upward trend line and the downward trend line, by Thursday the 24th of next week, we should see the market decide what it wants to do. Typically, when the upward trend line and the downward trend line intersect, the price may stay inside that intersection until it reaches the intersection, and then the market will typically decide if it's going to go upward or downward. So another possibility is that we won't know what the market will decide until Friday of next week or the following week. Let's review the NASDAQ 100, the QQQ. We see very much the same story. This time it had 2 bounces off the last support line, and they're very much definitive bounces because on Wednesday of last week and Monday this week, the price did reach very closely the last support line, and the price fell 4 days straight. So that is a definite bounce off the last support line. The downward trend line and the current upward trend line intersects on Wednesday, April 23rd. So it seems like late next week and early the following week, the market will probably decide if it wants to try to test the resistance at the last support line or if it's going to fall down the current support line. Let's review the Dow Jones Industrial Average, the DIA. This is pretty much the same story. We've had two bounces, one on Wednesday last week and the other one this Monday. If we draw the upward and downward trend lines, we see an intersection on Tuesday, April 29th. So it would be early following week, not next week, but the following week. Let's review the Russell 2000. These are the small caps. This is the IWM. Similar to last week, the Russell 2000 has not shown any definitive strong moves like the other indices. Right now, it is stuck inside of a trading range. It looks like it's trying to stay in the middle of it. Unless we have some sharp movements, we won't have an idea of what the market wants to do with the small caps. If we can get the price to go sideways for weeks to months, then we should see potential for a strong move to the upside or strong move to the downside. But more than likely, a sideways trading range tends to move upward. Let's review the mid caps, the S&P Mid Cap 400, the MDY. This one has had a little more movement than the IWM. The pattern looks more like the SPY, where it had a very strong move and a bounce off resistance Wednesday of last week, and then on Monday moved higher but didn't quite reach the resistance of the last support line and fell down. But on Thursday, on the close, it finished upward. The upward trend line is clear, but the downward trend line is not as clear. But if we draw one based on the most two recent peaks, we do see them intersecting on Friday, April 25th. So for these indices, seems like the story is let's wait till end of next week and early following week to see what the market has decided. Of course, anything could happen, but these are the possibilities or the more likely scenarios based on the current price action. Let's review gold, the SPDR Gold Trust, the GLD. On the PIM Trader, we started talking about gold on the end of January. We've identified the entering the buy zone, and it gave us until March 13th, so over a month, nearly a month and a half to buy inside that buy zone. And then the chase zone is our last chance. It got out of it on April 2nd, so just a few weeks, and then it gave us another chance based on the market sell-off to buy, and then it shot off like a rocket. Right now the price is overextended. It is way above the chase zone. The price is now and has been since last week in the hold zone. So if you bought in the buy zone, in the chase zone, or if you caught it much earlier than that when it broke the 50-day on January 7th, you're doing really well. For those that have not bought, it is advisable to avoid and look for another entry opportunity like a dip and the bounce, which is what we talked about. You see a dip and then you see a bounce. Let's review silver, the iShares Silver Trust, the SLV. We now have a chance to buy again in the buy zone. Price re-entered the buy zone on Wednesday of last week, and on Thursday on the close it finished right at the 50-day moving average. To make this a strong buy, we want to see the price stay inside the buy zone and stay above the 50-day moving average. We may want to wait a few days to make sure it proves itself. Also, given the indices that the price action may happen on late next week, starting maybe as early as Wednesday, we could consider waiting until then to determine whether to buy. Silver has not moved as sharply as gold and as the indices, so if the indices have a strong move, we should have an opportunity to buy based on how silver is reacting to the market's move. And lastly, Berkshire Hathaway. It's been in the hold zone for a while. It gave us a short opportunity to buy in early April when the market sold off. But as you saw, it took off like a rocket. And when it found support 2 weeks ago with the market and went quickly back into the hold zone, it did show some weakness like the rest of the market the past 4 days. So it may give us an opportunity to buy again. Right now, given that it's finding resistance at the last high, it may be forming a new base. So right now, this is a very high double bottom or W pattern. So it is possible we could see it fall into the chase zone, maybe around the buy zone, and then start going back upward, or it could bounce off the hold zone line and buy. Given the resistance at the last high, if you do see a bounce off the hold zone, it would be an opportunity to buy, given that it is finding resistance. So in a sense, it is kind of like a new buy opportunity since it looks like it's trying to form a new base. And that's it for this week. This is the Pimp Trader.